I have to go back a little bit to my economic roots. I'm just looking at the devaluations that are taking place around the world. Many people don't know about them because they're not hitting the headlines. Egypt devalued the pound, the Egyptian pound, by 40% in March, and the UAE is coming in to rescue it. And there is stuff going on out there with devaluations. You look at Japan. I mean, it has had to intervene. What is going on here? It's very interesting. I think one of the things that's going on is Bitcoin. There is an insurance policy out there. That's the first thought, an insurance policy. What if I just dabble a little bit? And anyone who did that in Egypt or Nigeria is another one, another 50 to 60%. These poor people, to the extent they have their wealth and purchasing power in that one currency, they're learning every day. I have to change this, and they have a way to do so.
Most people worldwide are unaware of the significant currency devaluations occurring right now. Multiple fiat currencies, including major ones like the Egyptian pound and the Japanese yen, are collapsing in value in real time. The yen, the fourth largest currency globally, is reaching multi-decade, if not historical, lows. Despite these events making headlines, the majority remain oblivious. Cathie Wood has recently highlighted this issue. She believes that modern monetary theory has driven central banks to continuously print money, making the collapse of fiat currencies inevitable, as history shows. However, Cathie points to a solution this time: Bitcoin. She argues that Bitcoin, with its fixed supply and inherent scarcity, will rise to $1 million per coin by 2030, which is now her baseline prediction. Stay tuned until the end of the video where Cathie elaborates on her Bitcoin outlook and the aftermath of the Bitcoin halving.
Stop, you don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
This takes us back to our early days with Bitcoin. And in learning about it and writing our first white paper in 2015 in collaboration with Art Laffer, when he read through the white paper, he said, whoa, wait a minute. This is what I have been waiting for since we closed the gold window in 1971. He said, I have been looking for a rules-based monetary system. And he was, fascinated by it, and increasingly so. Rod, you've met him. He's in Tennessee as well, Nashville. And he's so excited about the idea that we could be returning to private money and to get the Fed out of the equation. Now, I can tell you as an investor in the equity markets, the idea that Fed Chairman Powell can come out and all of the other governors can come out and say boo, and the financial markets freak out. Everybody freaks out because what they're saying is it's really been quite disruptive, and increasingly so in the last few years. So this idea of, a global, digital, decentralized, private, no government oversight, rules-based monetary system is a pretty provocative, profound, having been through many cycles since the late 70s when I was in college, but I entered the financial markets at that time. And, I just saw money unhinged in my early days, and have been a student of, how do we change this? And so when we stumbled upon, everybody stumbled upon Bitcoin, or at least I did. And it was, wow, this is pretty interesting. This could be transformative. And I said, Art, how big could this be? Back when it was $250. And he said, well, how big is the U.S. monetary base? So back then it was $4.5 trillion. Today it's $7.5 trillion. That should tell you something. And he said, well, there's your answer. And so we've been running with it ever since. Could it serve the three roles of money? That was our first white paper, and we concluded yes. Could it? Is it ringing the bell for a new asset class? Yes, but in terms of this monetary system idea, the halvings, this one coming down from 1.8 to 0.9, is taking the growth rate of the Bitcoin supply below the long-term average of gold supply growth. And but the difference is, and when I say this to people, it's an aha moment for them. The difference is when the gold price goes crazy to the upside, miners come out and start mining more, and send the supply growth up. And when I tell people, in the investment world, that that's not possible with Bitcoin, it's just not possible. Again, they do a double take. And so here we are for the first time below the growth rate of gold. And as Stan Druckenmiller says, well, gold is a 5,000-year brand. That's what he says, at least how he says it. Bitcoin's a 10-year brand, and I should pay closer attention to it. And I think the halving is another one of those aha moments. In the financial markets, because the spot Bitcoin ETFs have been approved, and there's been, I don't know, how much is the net new, Yassine? I don't know, it's billions have come in. And these are people who, many who probably were not in the last halving and or in Bitcoin during the last halving. So it's going to be, and they come in saying, oh, with the halving, that means Bitcoin, the Bitcoin price is going up because they saw it in 2017. There was a little bit of a wobble before it happened in 2021. So there are expectations built into the financial market. This is a great thing, and Bitcoin's going to go up because of it. But we have a whole new layer or kind of player in the Bitcoin ETF, and it'll be interesting to see their reactions if this doesn't go as planned. Oh, halving, and then it goes up. I don't know, Yassine, what do you think?
Yeah, I mean, I think to both Mike and your point, Kathy, the dynamics of mining there's a very ruthlessly competitive nature to it, which points to just the beautiful free market dynamics of Bitcoin that you don't really get in any industry. So where hash rate is going up and to the right, to Mike's point, the turnover, the entities that are actually producing the hashes look a lot different than they looked 10 years ago. And so one, like, kudos to Mike and Harry, whereas you're able to survive multiple market cycles as a Bitcoin miner, it shows that you are very well prepared. But there's also this increasing fear of like mining centralization, and there are only a few people that are mining Bitcoin. But if you actually look at the turnover of both mining pools and mining entities, it's extremely high. And I think many people don't appreciate just the consolidation that you get in massive sell-off and massive sort of sell-offs, and where hash rate draws down as well. I think obviously the China mining ban is a really, I'd say, important example of how mining was concentrated in China. They banned mining. Hash rate drew down 50%, and there was a new market of people that were like, all right, if hash rate's going to draw down, we're going to buy your rigs and we're going to set up shop, and this is going to be an entirely new ecosystem. And so I think that is a free market dynamic that really only exists in an ecosystem like Bitcoin. And then I guess the layer above that with something like the Bitcoin ETF for institutional holders, it's like at the margin, price is going to be determined by buyer and seller behavior. And we have yet to see how strong of a holder this ETF base is going to look like. But I can tell you there's going to be buyers of last resort. If there's this mining death spiral narrative, you're going to have a turnover of the actual holder base as well. But there will always be a market for it at every layer of the stack. And I think that's kind of what both you and Mike are suggesting here.
I guess the biggest learning here for me is 5 lines of code. I did not know that. I did not. That seed has just caused this Cambrian explosion, as Will described it.
Kathy Wood offers insightful perspectives on Bitcoin, viewing it as a return to the concept of private money, free from the control of the Federal Reserve and traditional central banks. She believes Bitcoin has the transformative power to revolutionize the financial system by providing a secure and efficient alternative to fiat currencies. As we progress, Kathy's views underscore Bitcoin's potential to reshape the financial landscape. By offering a decentralized and transparent monetary system, Bitcoin challenges the traditional financial infrastructure and its reliance on central banks. Looking ahead, Kathy envisions Bitcoin becoming a key player in the future of money. Its fixed supply and inherent scarcity make it a promising candidate to address the flaws of current fiat currencies, paving the way for a new era in financial innovation. For more daily dose crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.